I welcome you to this very interesting panel, as well as welcoming the panelists who are kind enough, had the patience to wait and allow me to say what we are 1 hour late. So we have to push the time and try to be as brief as possible, but still full of information. Investing in energy is the title of this panel. Investing in Greece in energy, or investing in energy in Greece could be the title. Investing in Greece is a big challenge nowadays. Energy is a sector that one can invest heavily and successfully. But in order for someone to choose to invest in energy in Greece, Greece has to be an attractive investment destination. And this is what we have to pay our attention at. This is what we ought to do for Greece. And this is what we have to change. Because nowadays, we're not an attractive destination for investments, let alone for energy investments. And in order to talk on the matter, we have here Mr. Chris Cook on the academic side. We have Mr. Sanjoy Rajan on the banking side. And we have Mr. Lucas Pilitsis on the investment side. Mr. Cook, please, you have the floor.
Thank you. Good afternoon, everybody. I feel as though I'm something of a course. I call myself a course academic. I was asked by the former Minister of Defence for the UK, Lord Reid, to become a senior research fellow at the University College London in the Institute for Security and Resilience Studies. And this was in the aftermath of the financial crisis, when the UK came 2 hours away from the cash machines being switched off and 24 hours from shopping with violence, as we call it. And it was clear that the financial system of the UK was not resilient, and that matched pretty much the way that the energy markets were. My background is in energy. I was a director of what is now the biggest global energy exchange. I designed the UK natural gas futures contract, for which I apologise. And I have had an interest and expertise in global energy markets for maybe 25 years. Now, I'm going to be talking, my title is Back to the Future. It's a bit of provocation and hopefully some light relief along the way, because you've had a very long day and I admire the survivors in the room. 21st century problems cannot be solved with 20th century solutions. That's the point behind this. And the burning question is, how can the necessary, literally trillions of dollars and euros of investment in the 21st century low carbon energy that we're going to need, how is that going to be funded? Because since 2008, the conventional, what I call least dollar cost, or least sterling cost, or least euro cost economic principle hasn't really been providing answers, because the system broke 7 years ago, and I don't think anybody would say it's the same as it was. Now, the expression, which we heard from Mr. Kagani earlier, the least carbon fuel cost principle, to minimize carbon fuel system input for a given electricity, heat, or power output. That is the organizing principle, which was one of the pieces of work I did at UCL, was to identify who gets it right. And the Danes, for the last 40 years, since the oil shock in 1973, when they decided that the price had quadrupled, they used oil almost exclusively for their power, and they took the pragmatic decision back then, which they've acted on ever since, that they would operate on this principle. They didn't call it that, but for the last 40 years, everything the Danes have been doing has been predicated on the least carbon fuel for a given output of energy into the system. And that means certain things. Renewables. It means reducing consumptions. We heard about the European Union not getting things right. If the European Union followed this principle, then we might make progress, because the Danes in the last 40 years increased GDP it's almost doubled in that time. Their energy use has been flat and their carbon fuel use has declined significantly. That's what can happen if you apply this principle and the policies that follow from it. But how do you finance and fund all of that? And the answer, I believe, and this is where we're going to go back to the future, is prepay. Here are some examples of prepay. Prepay SIM cards. You pay forward for your communications. Prepay pub tokens. You pay forward for the drinks that you have in a pub in the UK. There's a 10 kilowatt hour prepay electricity token. I'll come back to that. But none of this is actually new. You see the wooden sticks. What's that got to do with taxation, you may ask? Well, I have here in my pocket a pair of tally sticks, okay? This is how people kept records until double entry bookkeeping, debits and credits, came along. They would take a stick, they would cut notches in it, and then divide it into two so that one person gets a record and the other person keeps a record. And that is how transactions were recorded. Now, there were two types of transactions. There was a proof of payment, a receipt, and that was called a memorandum tally. And the other one, this is the key one, was a promise of payment. So the kings of England raised money for 500 years by prepayment of taxation at a discount. They would go to taxpayers and say, how would you like to prepay your tax? And of course, they had to offer a discount, otherwise nobody would prepay the tax. And that is where expressions in the English language to this day come from. The tax return was the event when that stick was returned to the exchequer and matched. And at that point, you had accounted for your tax, and the tax return was actually an event. Who here has not heard of a rate of return? The rate of return was the rate at which these sticks could go back to the exchequer and your profit on your discount would be made. So you make a 25% profit in 1 year, it's a 25% rate of return. Over 2 years, 12.5% rate of return. Over 5 years, 5% rate of return. That is the original meaning of rate of return. Who knew? I was the director of a global exchange. I didn't know. I would bet nobody in this room knew. Now, do you know what this one was called? It was called the stock. And the other one was called the counter stock. Stock exchange, anybody? We have shares in a joint stock company. Common stock, stock in common. We have loan stock, gilt-edged stock. The fact is that prepay was the way that finance was done before modern finance came along. So that's the history lesson. Could you put me back to my presentation, please? Thank you. So what's energy prepay? Because that's what I'm going to be talking about. Because that's the instrument that enables us, will enable us, to fund the transition to a low-carbon economy. It's undated prepay credit, an electricity voucher or a gas voucher. It's issued and it's sold by energy producers. It's returnable then. Anybody who has one of these things can present it to the supplier in payment. What it isn't, and I show here what it is not, it's not debt, because whoever has one of these instruments can't demand money. It's not a derivative, like the futures contracts I knew from my time as a director, because he has no right to demand delivery. And it's not equity, because there's no dividend, but he can present it in payment and expect it to be honoured. Next. What's the value propositions of energy prepay? The producer, he sells his energy forward, essentially, the value of it, and he locks in a price. It's also an interest-free loan. As it was for the sovereign, he's getting an interest-free loan, but there is a return, in this case, in energy, or the value of it. For a consumer, he's prepaying for energy and he's locking in a price. For the investor, it's what we call in the trade an inflation hedge. Energy holds its own when the euro or the dollar or the whatever it is, it may not hold its own. Energy is the one constant. What about liquidity? In markets, we have to have liquidity. Well, consumers can buy credits from investors at the best price below the actual physical price and return it against use. So even if no other investor wants to buy it, a consumer will, because he can use it. Now, has it been in use? Well, yes, it has been in use. Prepay has been actually going on in the markets since Enron, the smartest guys in the room, Enron. They defrauded their investors because they were using prepay to raise money that the investors knew nothing about and the lenders to Enron knew nothing about. They used prepay in a non-transparent way. Prepay is wonderful if it's transparent. Then there's the global oil market, my favorite subject. For over a decade, prepay funding has been used by producers to support the global oil price. Okay, that's why the price went where it did, because actually under the surface, prepay is being used to manipulate markets. How can anybody do this? Well, Hamanaka, the copper trader, manipulated the copper market for 10 years. And 5 years after the whistle had been blown on it, it's completely possible. What's been happening is massive amounts of money have been going into the energy markets from funds, exchange-traded funds, index funds. And one thing you know, if a producer can support prices with other people's money, he will. And he did. They did. For the last 5 years in particular, the price has been artificially supported, and for 5 years before that, we had a blip in the meantime. Am I just saying that now? No. I said this in Tehran in 2011. In 2012, I'm on record as saying that the oil price would collapse to $45 to $55 once quantitative easing, money printing, ended. And I think my friend over there will confirm that. I said it would, and it did, because it's been artificially supported all this time. So much for the history. Prepay is actually coming out into the open. The Russians have done a massive $85 billion prepay deal with the Chinese. So the Chinese have prepaid for crude oil, or they're going to over a period of time. Why? Because people are not prepared to lend to the Russians right now. But you can fund it with prepay. The transition trade. I talk about the transition to the low-carbon economy. This is the big trade of the 21st century, or one of them. It's the exchange of value or knowledge, of knowledge and know-how, for the value of carbon fuel saved. If you save a litre of gasoline, you save 3 or 4 litres of crude oil at the wellhead. If you save kilowatt hours in a household in the city and you're burning gas at 20% efficiency, you're saving maybe 10 times the units back at the well. This is the Klondike of the 21st century. This is where the action is. Huge amounts of investment is going to be needed in all of the countries that waste energy like it's going out of fashion. And it's not just producers who do this. The EU does this on a massive scale. And what you're looking to do, you're looking to get cheap gas from the Caspian and from wherever. It's a joke. So energy loans, prepay, could be invested directly in flows of value of renewable energy and energy savings. The higher the price of carbon fuel, the higher the returns from investment in saving and substituting energy. And I'm doing proofs of concept where I live in Scotland right now. Here we go. You can finance assets through selling energy credits to buy equipment, or you can do it with production sharing. You can repay an energy loan from buying back energy credits. Countries could and should increase carbon fuel price dramatically. We hear we need cheaper gas. Cheap gas and cheap petrol, you only have to go to a city in the developing world who have this stuff to see the effects on the environment of cheap gas and cheap gasoline. We don't need cheap carbon fuel. We need to capture the value and distribute it equitably and invest it in the next generation of renewable energy. So, an energy dividend is an idea that countries should increase carbon fuel price dramatically and then issue to the population an energy dividend of energy credits. You could do it on mobile phones these days. Part of the dividend would go to funding energy loan investment in renewable energy and energy efficiency. There are problems. What about conventional fuel, carbon-fueled energy? If a generator sells some of his production forward, isn't he going to be in trouble if carbon fuel prices go up? The answer is yes, he will be. So what do you do? Well, we heard earlier about gas-to-power swaps. That's what you do. You share the production. You go into energy as a service. The outcome of the energy swap we heard about this morning and prepayment in relation to the heat or electricity is oil and gas as a service. We don't sell oil and gas in the future, we supply it. And we sell the end product and we raise our finance by monetizing it with energy credits. This is a big thought. It's very difficult to get your head around something like this, but I believe this is the future. This is an energy swap. You saw that slide this morning from Mr. Kagani. This is how it could work. Producers, Iran, Russia, whoever, provide oil and gas. Goes to a Greek refinery or a generator. Electricity comes out of a generator, gasoline comes out of the refinery, and the consumers buy it. But it's the consumers who would use the energy credits, and the consumers who would invest in the energy credits in preference to other things which don't hold their value. So, who will fund the trillions of dollars necessary to fund the transition to a low-carbon economy? The answer is very simple. There are trillions of dollars and euros out there who are prepared to accept negative returns over 10 years purely because they think that will retain the value of their capital. Who here thinks that people with investment like that would not invest in the energy credits which fund the renewable generation of the future? That, to me, is the future. And am I permitted a thought experiment here, Mr. Chairman? It's 2 slides, no more than that. We're in Greece, which has a fiscal and monetary crisis. Here's the Chris Cook thought experiment about what you might do about it. Okay? Step 1, put your carbon fuel prices right back up to $120 a barrel equivalent, whatever the price is. Step 2, pay Greeks an energy dividend of energy credits in their electricity bill. So you give them credits in their electricity bill. I'll come back to that in a second. There's also the possibility of land taxes and land value taxes. And I personally think that's a good way of going about it because people can move, but land doesn't. So maybe a location benefit levy, but I won't go into that. What a crazy idea. Except tax evasion is so bad in Greece that property taxes have had to be collected through the energy bill. Okay? So maybe this isn't such a dumb idea as all of that, to actually put the price up, encouraging the better use of it, and then invest the proceeds in the next generation of energy infrastructure in Greece. Just an idea, I'll throw it on the table. I'm being provocative. Hopefully I've woken some of you up, although you all look fairly well awake to me. Thanks very much for bearing with me.
a different approach to new concepts and old ideas. Good food for thought. And I would ask Sanjay to take the floor and give us the point of view of the EIB. Thank you.
Thank you, Mr. Chairman. Ladies and gentlemen, firstly, I'd like to thank the organizers for once again inviting the EIB to this conference, which, as we've already seen, is a very good opportunity to exchange a number of views on EU energy policy, Greek energy policy, and neighborhood energy policy. John Roberts, I think, was perhaps too kind to EU bureaucrats, saying they're useless. I'll try and present that not all of us are in that mold, and by showing the track record of the EIB. Another 2 points I'd like to raise is actually through the discussions to date, we've actually talked about big projects, big schemes. We've talked very little about money, in fact. And there have been a few mentions of the costs of the Southern Gas Corridor, the 45 billion and so on, but actually for these big projects, financing will be an issue, large financing. And also to Chris Cook's point, it's not just big projects. Renewable energy, energy efficiency are also very key. And I'll touch on that as well. The three things I'd like to talk about are the EIB and its role, the EIB and its role in energy then, and then the EIB and energy in Greece, because we have a long track record in financing energy projects in Greece, and we continue to do that. So the EIB, what is it? It's the Bank of the European Union, set up with the Treaty of Rome in 1958, owned by the 28 member states. 90% of its annual lending is typically within the EU. The other 10% outside the EU, with a huge focus on the neighborhood of the EU. The bank, therefore, primarily exists to support quality projects in member states. It is the largest multilateral lender and borrower in the world. Last year, the EIB's lending was 77 billion euros. And if you take the typical leverage that this brings, this would be well over 300 billion euros worth of projects. The 420 projects that are approved were across a variety of sectors: energy, knowledge economy, small and medium enterprises, transport, including road, rail, Athens Metro, for example. And so it's a wide spectrum of very important, principally infrastructure projects, though the small and medium enterprises element is probably the single largest one. Infrastructure overall is larger. The AAA rating is very important to the bank to be able to borrow. Last year it borrowed 62 billion euros on the bond markets. In order to do that and to be able to pass on benefits, the rating of the bank is important. There are a number of products that the bank offers. There are loans. The loans can be standard corporate loans. There's project finance, PPPs, there are guarantees, equity, and I think next speaker may even come into that, supporting equity funds, risk sharing, and advisory services as well, in order to help certain projects to be structured in a way that they can access the financing. Another aspect that we should bear in mind is that the EIB and the European Commission are increasingly working together to create financial instruments for particular sectors which can be targeted to those sectors' needs. I'll briefly mention the Juncker plan a bit later, because this has been in the news, and the EIB and the Commission, of course, are very key in ensuring that that is implemented. Now, what about the bank and energy? Firstly, the bank recently revised its energy lending criteria. After about a year's worth of consultation, a lot of dialogue between institutions, with the public, other stakeholders, we issued revised energy lending criteria in mid-2013. The key reason for undertaking this review was to keep updated with the trend in EU policies and objectives. The bank is the EU's bank, and therefore has to interpret EU climate, energy, and other relevant policies in the way it lends. The outcome of this was that we're going to prioritize 3 areas: energy efficiency, energy networks, including the PCIs to a large extent, renewable energy, as they represent about 90% of the lending that we foresee. Energy RDI is also an important area, but we don't foresee that being as large a component, but it is a priority. And again, I'll take this opportunity to say we've been talking about gas supply, pipelines, and so on. And it's very important to realize that energy efficiency and renewable energy typically are domestic resources, which if well managed, can have a great impact on energy security, which is what we're talking about. Another aspect which we introduced, which was quite innovative for an institution like ours, is that we've introduced a threshold for fossil fuel power generation. We have a threshold of how many grams of CO2 can be emitted per kilowatt hour for fossil fuel power generations. This is linked to the EU ETS system, and by using this threshold, an emissions performance standard, we can screen in or screen out particular power plants. It's not about selecting technologies, it's about looking at emissions. So a coal-fired plant with carbon capture and storage could well be feasible under this. What's our track record in terms of money? I promised to talk about money. So if you look at this, for the 2007 to 2014 period, EIB lending to energy was nearly 100 billion euros. This, about 80 billion was within the EU and just over 16 billion outside. With the typical leverage ratio on our loans, this equates to over 330 billion euros worth of energy projects over that time period. Because we never lend more than 50% of any project, and most often it's in the 30% range. 45% of this lending was for renewable energy and energy efficiency projects. About the same percentage for energy networks, including many what were called 10E projects, now PCI, projects of common interest, which we've heard about. So the summary of this slide is that the bank is a major funder of energy projects, which typically account for about 15% of the bank's annual lending. This year it accounts for about 18% as it happens, 13.5 billion in 2014 out of 77 billion actually approved for lending. If we look in detail at how this breaks down, so for 2014, as I mentioned, the big areas are networks and renewable energy, energy efficiency if you take them together. So for networks, electricity networks, about 40% of the lending, and I'll talk about some examples in Greece in particular, 11% for gas networks. Renewable energy, a lot of that last year was offshore wind. We did some very big projects, 31% and 9% for energy efficiency. The 9% for gas production, in fact, gas production is something we are able to do, not gas exploration, but production. We can develop proven reserves. We actually lent money to Italy, Eni and Edison, for production offshore Italy, and also for a gas production project in Tunisia, in fact. At this point, I'd also just like to mention a few projects of note. There's been quite a lot of talk about Russia and Ukraine. Last year, one of the projects in the gas networks section, which we lent to, and it was our first operation in the Ukrainian gas sector, was for one of the major transit pipelines that goes across Ukraine to rehabilitate that and also make it ready for potential reverse flow. This was our first operation in the gas sector in Ukraine. We also heard this morning a lot about Egypt. It's worth mentioning that the 2 LNG liquefaction plants in Egypt, Damietta and Idku, though before 2007 were both financed by the EIB. The Polish LNG regasification terminal, financed by the EIB. The Lithuanian LNG regasification terminal, also financed by the EIB. So we have a really very direct role in some of the key projects regarding security of gas supply in the EU. If we now move to Greece, we've done a number of key projects in Greece. Over the 5-year period, 2010 to 2014, the EIB approved over 2 billion euros of lending in Greece to the energy sector. Last year alone, the Revitusa LNG terminal extension, which was essentially about increasing the capacity of Revitusa, was approved. The Iptos-Cyclades interconnection, which I think has been alluded to this morning by the minister perhaps, was approved. A broader IPTO being the transmission system operator for electricity in Greece, was approved. And a project to increase the electricity capacity on 18 Greek islands was also approved, the PPC power projects. If I just run through some of the key numbers, through the Tiva power plant, the PPC Megalopolis power plant, and the PPC power projects on Greek islands, we have financed an additional 1.6 gigawatts of new capacity for Greece over the past 5 years, which I think is really quite noteworthy. Another theme, I mean, you'll see the first project is a petroleum refinery upgrade, which may seem, well, why did you do that? Refining in Europe is in difficult condition. This was all about energy efficiency at the refinery and the ability to produce cleaner fuels for lower emissions. That was the reasoning behind that project. And I'd also pick out the Hellenic natural gas, which is very much linked to the PPC Megalopolis plant, because in order to get the gas to that plant, a gas pipeline had to be built. And it wasn't just about getting the gas to the plant, it was about gasifying a region of Greece that didn't have access to gas at that time. If we now take a snapshot of one of the recent projects, which is the Iptos-Cyclades interconnection, it's just to show you the type of project we're working on, the type of project we support. This is a subsea cable grid that connects the major Cyclades islands. This will allow better system reliability. It will allow them to also interconnect renewables into the mainland grid. It will also allow them to use less fuel oil or diesel-powered plants. Therefore, it also has an environmental impact. The EIB provided 130 million and as a long-term loan to IPTO. So this was just last year. I just want to conclude by saying a few things. Firstly, I hope you've seen that the EIB is a large funder of energy, but again, to widen it from the discussion we've tended to have on just gas supply, energy is much wider than that, and security of supply isn't simply about diversifying your gas suppliers. It's about also demand management. And we are very focused on energy efficiency and renewables as well. And this, I think, is well in line with what the EU also has as objectives. Not only is the EIB a major funder, but energy is also very important within the EIB portfolio. And it's very important in terms of what the EIB does in Greece. If I'm not mistaken, energy, I think, certainly over the recent past, has been the largest sector of EIB involvement in Greece. I also want to just make a brief remark on the Juncker Plan, or the FC, European Fund for Strategic Investments. You may know that member states have provided lists. The EIB sees this as being a very valuable additional mechanism for there to be funds going to projects which have particular risk profiles. The EIB, as conceived at the moment, has a key role to play in the EFSI in terms of undertaking due diligence and looking at the projects that will go forward through that. Of course, European legislation, the legislative process is ongoing and should be terminated mid-year or a bit later. But the EIB, therefore, when that goes through, will continue its large and important role in energy. But given that these lists, 1/3 of the 2,000-odd projects are in energy, we foresee an even larger role that the EIB will have to play for energy within the EU, and we look forward to doing that. Thank you very much.
Well, it has been exhibited what a strong financial pillar EIB has been and is still and will be, hopefully. And we come to the last speaker, which is an awkward position. Please, you have the floor.
If you don't mind, I'll speak from here. I don't have a presentation. You can imagine why. Speaking about investment opportunities for Greece these days is an interesting and awkward topic, as Mr. Folia said. What we'll discuss is what we think from our perspective as an investor. I'm an equity investor, so I will give you a way of introduction, the background, and then where we see some potential for Greece under normal market conditions. So obviously we'll be talking what the opportunities are in the country. If we have stability in the political system and the tax system and the energy payment system and the execution of the energy payment system, because it's not only the opportunities that we may have in a country, it's also the execution and if it makes financial return and making sense for investors, because private investors want to see, obviously, return. Some of these projects, these huge projects, obviously are social related as well, and that's why investors, private investors, are very hard to enter. Talking a little bit about the interconnected system for the islands, the offshore systems, these are very expensive, that they can only be done with the assistance of lenders like EIB. And hopefully this will be implemented, executed and completed, which is very important. Way of introduction, Lucas Pilitsis, founding partner, one of three, of a newly formed group called Anchorstone Partners. Until recently, I was, as recent as late 2014, I was heading the venture capital and private equity group of Piraeus Bank Group, which is the biggest bank in Greece, where in something less than 5 years, we established a business of 3 funds, 100 million, focusing in technology primarily and energy. Energy for us meant and continues meaning in my new venture, clean energy, energy efficiency, grid-related benefit, and we'll talk a little bit about that. And we created one of the first funds in Greece, equity funds, an English limited partnership, which started investing in late 2011, pure equity funds. Did only a couple of deals in Greece, very close to 2 deals in Balkans, and then obviously the market just shifted completely, where we had to have a hold position until things really changed. So, having said that, Anchorstone Partners has experience in energy. 2 of the 3 partners very much so, technology and telecoms. Let's focus on energy now. Energy for us means clean tech, means renewable energy, means energy efficiency with investments that we've done through the years, not only in asset generation projects like photovoltaic park or biomass greenfield project, that will always remain, well, for the moment, it seems that it will remain biomass and biogas, 2 very niche markets in Greece until it gets a head start. Very hard to see opportunities in these areas because you have a great dependence on the supply of the raw material for biogas and biomass projects. This is an issue. Opportunities in Greece, again, let me put the caveat here. Under normal market conditions where there are payments, There is opportunity in the renewable energy, both on the secondary market and the primary market even of the photovoltaic wind parks. Costs have gone down. Assuming the rates will stay the way they are and you have a stable environment, so a lot of assuming subject to and so forth, the opportunities are there. Energy efficiency is another big area. We spoke a little bit with Mr. Folias, and I think there will be a topic on that tomorrow. The energy efficiency and the storage of the electricity that's being created by the renewable sources and the preservation through big battery storage is something that we've looked into, and some other countries obviously are ahead, and I will not go into more details into that. Will be a topic for tomorrow. Something that has a big potential, connection to the grid. The smart grid problem that it has been the talk of the last 4 or 5 years, at least, even in this country, has an interesting potential, and you were heading a little bit to that direction. So I want to make sure that we have that benefit of discussion. And from our perspective, we see also the LNG potential down there. These are areas that we can see for smaller projects. Private investors cannot really get into these huge projects. They need to be seen as infrastructure, social projects. And I don't foresee private investment involvement unless we see moves like the EIB opportunities. I would like to stop here because I know that we want to brief a little bit the time and have the opportunity to have questions and discussion. Thank you.
Thank you very much, Luca, for your intervention. Short but juicy. And one thing I have to say is that wherever there is a crisis, there are opportunities. And this is an axiom. It's not a rule. Without having anything else to say, I would give the floor to any possible questions so that we can capitalize on the time. Sir, you have a question, please.
Igor Ivanchenko, Embassy of Ukraine, Economic Section. I have a question to Mr. Cook. It was a brilliant idea, and once I've been involved in the same investigation. But it comes raised several issues, and number one, as far as I understood, you are going to provide to secure the liquidity of financial market by converting them into the energy units. And to this regard, 3 questions. First of all, how are you going to come to the market? What product are you going to deliver? It will be a basket of energy products like electricity, heavy oil, or just petroleum, or as well as gas, liquid gas maybe. Number 2, how you will manage your market? By what mechanism? Who will manage the conversion and the accounting of the balance between money and energy units? Number 3, how do you have vision about the reverse mechanism of how I can back units to money, energy units? And number 4, are you going to replace USD and Chinese yuan? What is the possible reaction from the financial community? Thank you.
What was the last question?
Are you going to replace USD and yuan with energy credits?
Thank you. I'll start from the end. You're always going to need something to keep score. Okay? That symbol of the dollar and that symbol of the euro is a means of keeping score. And that's called a unit of account. That is not the same thing as the value which changes hands by reference to that way of keeping score. You can never run out of meters and kilograms, and you can never run out of units of account. So the dollar or the euro or whatever it is will always be there as a means of keeping score. When I talked about least carbon fuel cost, I meant energy accounting. I meant keeping score in energy. And that is what we will be doing if we go down this road. We will be keeping score in energy. Now, the question of the products, this is a big idea, and not the simplest ideas are the most difficult to grasp. This is not like a futures contract where you have a right to demand delivery. It's a means of payment. And let's say that Gazprom, let's take an example, Gazprom were to issue gas credits, okay? So it would be selling gas credits to investors, maybe at a discount, maybe it depends on the view of the investor as to where the gas price is going to go. And then these gas investors would either be users, like the Chinese, who actually can use these gas credits to pay Gazprom with, or if maybe they don't want to pay Gazprom at some point, they can sell them to the Japanese or to somebody else who will then pay Gazprom. Because Gazprom, when they supply, somebody will come to them and say, here you are, Gazprom, here's dollars. Or, here you are, Gazprom, here's those credits you issued. That's the point. These are instruments issued by a producer which he has to accept against value that he supplies. So a gas producer will issue gas credits. An electricity producer would issue electricity credits. These things are related. And yes, we would create frameworks within which these would trade, which brings me onto market regulation. I used to be the regulator of the International Petroleum Exchange. That was my job. And yes, you would create an institutional framework within which one of the key functions is somebody who actually keeps control or monitors the issuance of these things. Because the risk is that Gazprom issues more credits than it's got gas. Of course, that's the problem. Therefore, you need somebody, and if you think about it, this is very much like a monetary authority. It's managing the issuance and making sure that there isn't over-issuance. The difference being, this currency is based on something everybody actually needs. A bank currency is just an instrument of exchange. It's not actually based upon anything at all other than capital. So hopefully I've covered your question there. I hope so.
Very interesting.
I'm afraid to this regard we will need to establish new instrument like New York Energy Stock, maybe exchange, you know. And the second one, how you will secure the production of the energy, like gas production, oil production, electricity production.
Mm-hmm. Well, what we're talking about here is existing production. You can't issue prepay units on a stream of investment on a stream of energy that doesn't exist. So we're still going to need, my colleague here, to actually finance the creation of these projects which then have a revenue stream. I distinguish between financing, which gets things built, and funding, which is what you need when something has been built. And what I am proposing here is that this idea, this concept of prepay that's always been around, thousands of years, is a means of funding that will enable us to come to the EIB and say, okay, these debts are now actually being repaid because investors are investing in the future production. This enables you to recycle your development credit and finance everything else that we need. And it becomes a virtuous circle. It's a means of monetizing future energy production. And I believe that the best energy production to monetize is renewable energy. Why? Because it's taking £50 notes out of the fresh air and out of the sunshine. This energy doesn't cost anything. So that if actually you can monetize it, you have a wonderful proposition.
Well said. Thank you. Any other question, please? Over there at the end of the room, please.
Thank you. Can I ask Sanjo a little bit about the evaluation process that the bank is going through before deciding which projects are, let's say, going to make it and which ones are not going to make it? And I realize that this might be different, let's say, when you're looking at the power generation project compared to networks. But I would like to understand what discussions the bank what discussions are taking place in the bank. Is it about profit maximization? Is it about minimizing risk? Is it about identifying market failure? What is the key criterion?
Broadly speaking, there are two elements. There's what I'd call the project technical commercial side, and there's the financial side, which is about credit risk, the financial standing of the borrower. Let me start with the project side. On the project side, two key elements. One is the financial rate of return of the project itself, to be distinguished from, let's say, if there's a group investing, you will look at the balance sheet. That's on the financial side. Another very important element is what we term the economic rate of return. So it's about looking at whether this is the best economic alternative compared to what other options there could be. In order to do that, we have a carbon price that we use for our evaluation. Externalities of that nature are taken into account. Social aspects, so that if something is substituting, I talked about the Hellenic Petroleum Refinery, cleaner fuels were coming as a result of the investment, and you can take an approach on that to see what the economic benefit is, even if there isn't a set carbon price, in a sense, in Greece. So that aspect, the economic rate of return, is very important. On the other side, pure corporate, you do the financial analysis, the credit rating. For project finance, of course, you really have to look in far more depth at the project itself. And I think, as Chris was mentioning, and you look at that, does the project have the revenue stream to cover what is going on? And I don't know if you picked up, that's the reason under our current system, for example, we can't finance oil and gas exploration. But once there are proven reserves, we can see that there will be a flow. We can finance a development forward. One other aspect, if you're interested, actually, it's on the internet. We publish what we call our methodology to economic appraisal of projects. It's available publicly. So that gives you sector by sector how that economic analysis, not the financial is, I think, pretty well known to everyone, how we take into account externalities, how we take into account other social costs to calculate our economic rate of return. Does that answer your question?
Thank you very much. Any other question, please? Well, then allow me to make a last question on this panel. I would like to ask Mr. Peritsis, what would be the specifications for an energy project to be interesting for you to invest upon? What would make it more attractive than something else?
In the same sector, correct? At this point, again, with all the caveats we talked about before, one of the things that we're seeing is, to begin with, the benefit of an infrastructure, which really is an energy project and an asset generation project, has the benefit of predictable cash flows, the benefit of the collateral. So that minimizes, believe it or not, to a certain extent, along with the caveats we've talked before, the risk of loss. There are opportunities from that perspective, and we would be looking into the secondary market, as I mentioned it, operating assets that have their numbers are getting, at this point, I would say in the high teens, in the high singles, early teens, depending a lot of parameters that are case specific. You see, the problem we're having, we talked a little bit about sustainability, and that's a problem, and predictability rather than sustainability. So it's a hard question to answer, is that there are completely different prices, completely different ways of payment, completely different specifications on each individual project, unfortunately, in Greece. And I'm focusing on Greece, although we're looking at other projects outside Greece. And at this point, obviously, we're not looking at projects in Greece. There is a standstill from our end looking at that. This would be the areas. Obviously, for us, it's primarily the financial return for our investors in our own money, and it's all depends on cost-benefit analysis that we would see, and you can still find some decent deals.
Thank you very much for your attention. I would like to thank the panelists very much for their contribution and their availability, and thank you for allowing us to finish 1 hour later than programmed. And I wish you a pleasant evening, and hope to see some of you tonight at the dinner. See you tomorrow. Bye-bye.